Welcome back to the ETF Inspector Vacation Edition. It's Saturday, August 9th, just about 4 o'clock p.m. We're in between beaches, being at the beach and showering to get ready to go back out for dinner. So just trying to make a quick video for our YieldMax. We call it monthly, but it's really every 4-week distribution funds. They're individual income strategy funds. We've highlighted FBY there, but we cover 7 of them altogether on this channel, and we'll get into it in just a minute. Reminder, I'm on X at ETF_Inspector1, building a nice little following there, 648. I'll let you know when videos are premiering, as well as lots of other stuff in relation to these, the trades being made or distribution announcements, things like that, shout outs when people buy me a coffee on that website. All right, so thank you for tuning in. I'm going to try and get through this a little quicker than I usually do so I can get back to vacationing. I'm going to start on, we're going to do them in a little different order this time. We'll start on Group A. GOOY is the fund that we cover from them. That's for Alphabet's company Google. They just did their distribution this past week. They announced 44, almost 45 cents, coming out to a 45% annual yield. If you watched last week's video, my estimate was way off. I said 34, and if you watch the video, you see how I came to it. They lost money on the 4-week cycle, so the income estimate goes out the window, and then we're supposed to fall back to the IV estimate. Based on what the IV was for the fund, it was 28.5 cents. So we kind of looked through their recent payments before that and decided to increase up from the IV to 34 cents. And then they came out and paid another almost 11 cents more than that. I missed it by 24%. Who knows why, right? They lost money and then they turned around and paid well above the IV estimate. So at that point, how am I supposed to make a guess? Anyway, I forgot to update that. So 8.86, obviously it's not negative 3 days, so it's like 25 days. I don't feel like going back and doing it right now. We'll get it updated before the next time we're worried about Group A, because it's coming up on Group B. So we'll look at their trades before we move on. It's a new cycle because we just got paid. So the last cycle ended last week. This is the first cycle of the new week. On the first day, we had a debit of 414,000. Looks like we added to the synthetic position, which pretty much is the reason for that, right? It cost us money to buy more of those 180 calls compared to selling the puts. Closed out 120 contracts at the 202.50 and sold 300 contracts to go along with the new synthetic at 200. Then on Friday, they were closing out the rest of what was open for the week, right? Expiring Friday, right? And selling out to the next week 205s and 202.50s, and that cost them almost $1.5 million. Next, we will go to Group B, because that's who's paying this coming week. So we can look at the trades for the week and then kind of take a bigger step back picture of the 4-week cycle. On Tuesday, it cost them $27,000 overall on the trades, closing out 60 contracts, expiring Friday, closing out another 60 at a higher strike price, and then selling both of those for still within the same week. So the strike got blown through, and they went ahead and tried to still make a little bit on the week. Next day, Tuesday, now we're closing out and rolling to the following week. All closeouts were for 8.8, some 7.95, 7.97.50, and 7.95, and selling all August 15th 7.85, 7.85, and 7.87.50. So right after we bought the close and raised our strike the very next day, obviously the price came down. So we just sold out to the following week, collecting $963,000. And finally on Friday, we just closed out 60 contracts for August 8th, and move them same strike price to the following week, netting a $4 per share difference, or 24,000. Now, if we take a big picture look at the 4-week cycle, we had one rough day, July 31st, that basically cost us the whole 4-week cycle. That was a negative $5 million day, and overall we were negative $2 million on the week. So if it weren't for that week, we'd have been well into the positive, but it's there. So they lost money trading over the week, but that means that the stock went up through their sold strikes. So our synthetic increased in value. Let me step 1 minute back. Our synthetic for Google is worth almost 17 million, or $1.44 a share. It's out till September 19th. Back to FBY, also September 19th. It's a 725 synthetic with the current price at 769. Very nice. That's worth 11.8 million, or $1.06 per share. But let's get back into guesstimate, right? So we just totaled up the money. That would result in a negative 20-cent distribution. Now I actually need to update that. Still negative 20 cents. So then we go based on the IV. I update the IVs every Saturday. 30-day IV decreased from last week down to 25.5. I like to use Market Chameleon to look up my 30-day IVs. So here it is, Meta Platforms, 25.5. Okay, so if we take our IV, 25.5%, multiply it by our closing price Friday, 17.25, divide that by 13, because there's 13 4-week cycles in the year, and it comes out to 33.84 cents. I then took a look at their recent payments, and as we scroll through their distributions, there's only one time in their entire history of paying a lower distribution than that, and it was the very first one, 28 cents. So I don't think they're looking to break any kinds of records, but we do take that into account. So we look at, they lost money on the month. IV says a lower 33 price, but they've been paying pretty much around that 49-ish cents range. So we look at how the fund performed over the month, and although it had a dip in the middle, start to finish, it actually went up over the month, 1.5%. So I think they're going to hang in line. I took a look at the last time they lost about $2 million per in a 4-week cycle. Took a look at prices. So my guess is right around that 49 cents that they just paid. We will find out this coming Wednesday, August 13th. Calls for this week are sold at 785 and 787.50. Those are roughly 2% out of the money, 2.0 and 2.3. $192 million assets under management there. There was an increase. More people bought into the fund. 50,000 shares, 11,150,000. NAV and the closing price on Friday are pretty much in alignment with each other. I did forget to mention some of that on GOOY. GOOY's got 151 million assets under management. Big increase. A lot of people bought into the fund between last Saturday and this Saturday. 775,000 shares. Again, NAV and closing right on in line with each other. But now their forward-looking week, they've got calls sold at 200, 202, 50, and 205. The first one, 200's in the money. Luckily, there's only 300 contracts there. Then they've got 3,500 and almost 3,800 contracts at the next two, 0.5% and 1.7% out of the money. So they are playing it pretty tight. The other calls are purchased calls. They're basically insurance policies in the event that the underlying price runs beyond the strike prices. It limits how much money they could have to spend to close them out. All right, now that we're through those, we will just go to the beginning and move through. And it looks like I forgot to total up August 6th. Okay, this was real odd. I downloaded this and it caught my attention. This was in their trade download. They bought 100 shares of the actual stock, Advanced Micro Devices, and then they sold one covered call off of that, but then it never showed up in the holdings. So it was odd. Not sure if it makes sense or if it was placed in the wrong file or what, but resulted in a negative 17,000. On the 5th, that would have been Tuesday. Then Wednesday, they collected 290,000, closing out and rolling portions to next week. On Thursday, we had some more of that, closing some that are already out till next week and selling at a higher strike price. That's why it cost. Seems like they had a lot closed out. Yeah, so if you notice, on the 6th, they closed out 5,185 contracts and 6,000 contracts, so over 11,000 contracts, and only sold 2,700. So then the rest of these got handled. That's why there's so many more short sales on these, or it's really selling to open. But it's still, even with all that, resulted in a loss of 388,000. And then finally on Friday, just selling the rest that they hadn't sold yet, collecting 453,000. AMD is part of Group C, so not this coming week, but the week after, 11 days from now, they'll be declaring. They've got a synthetic at 155 for September 19th. Stock price is at 172, so that synthetic's worth $20.8 million or 95 cents. That's because there's almost 22 million shares, 193 million assets under management. AMD's at 881, right in line with the NAV. And they've got their calls sold at 175, 177.50, and 185. Anywhere from 1.3 to 7% out of the money. Next, AMZY for Amazon had 3 trading days for Tuesday, Wednesday, Thursday, and Friday. Tuesday, see they closed but did not open, so that's going to cost you 90,000, and then turned around on the next day and sold them, collecting 951,000. So if that would have all just been one roll in one day, obviously it worked out well. And then next on Thursday, closing the 220s and selling 230s for the following week. That cost them 1.1 million. Then on Friday, they took away, so some people bought out of the fund, so they had to close out a portion of the synthetic. That's what this is. But that actually worked in their favor, that part. They didn't lose money on that closeout. They did, however, have to close that 300 contracts. Again, it's only 10,000. Then they closed the rest of what was still open for the 8th and sold it to the 15th. Went from 222.50 to 225, paying 21 cents, collecting $1.78, resulting in $429,000 credit. Amazon's part of Group D. Their next declaration day is in 18 days on August 27th. They've got a synthetic at 220 for September 19th. When I say a synthetic, that's the only strike price, but there's 13,055 of them. That is currently worth 5.1 million or 27 cents a share, as Amazon is currently just above that 220, and there are almost 19 million shares. There was actually a decrease over the past week of 325,000 shares, people buying out. You saw that. We just talked about having to close out a portion of the synthetic. The NAV and the closing price on Friday within 2 cents of each other. You actually got a discount if you were buying on Friday. 290 million assets under management. They've got calls sold this week at 220, 225, and 230. Those 220s are starting the week in the money. We saw they made that move earlier in the week. 1.2% in the money, and then the other two are 1 and 3.2% out of the money. Next up is APLY for Apple. They had trades on Monday, Tuesday, Wednesday, and Friday. On Monday, a little bit of close and roll, actually down, still within the same week, so the stock went down, and they're still trying to collect more premium, more time value. Let's see, Tuesday, this looks like closing out. That's odd, closing out a large portion of the synthetic. Oh no, that's what it is. They actually roll in the synthetic, right? So the synthetic was expiring August 15th, so they closed it out, obviously making money there, and then they opened a new one, nearly break even, 600,000 to the negative on the new one that they opened, but what's that? Almost 3 million in their favor on the closeout. Roughly $2.2 million to the good credit. On Wednesday, we got a lot going on, a lot of closeouts and rolls to the following week. Everything closing out on this week, rolling to the next week. Cost us $925,000 because we're having to buy at $207.50, sell at $217.50, and likewise. And then finally on Friday, I guess the stock went up too much, so now they're closing things that they had already rolled to next week and rolling them even higher by another $12.50 on that one. What do we have here? By another $12.50 and another $10. So that's going to cost you every time $3.2 million. APLY is part of Group D. They've got the synthetic 6,750 contracts at 205 for October 17th. Stock is currently at 229.35. That makes their synthetic valued at $17.5 million or $1.53 per share. There was an increase in shares over the last week, 11.4 million outstanding. Again, you got about a 2-cent discount if you were buying on Friday. And what I mean by that discount is the NAV is basically just, it's all these dollars and cents. Here's what's in the fund, what it's worth. It's all the money divided by all the shares. So if you basically got to buy $13.40 for $13.38, not a bad deal. All right, their next declaration date is on August 27th, 18 days away. They've got calls sold for this coming week. Everything that I've talked about in this whole video sold till the following week. They sell weeklies, pay out monthly. 227.50s are in the money by 0.8%, and the 232.50s are out of the money by 1.37%. A whole lot more at that lower strike price. So we'll see how they handle that one. All right, we already did FBY, we already did GOOY. We've got the last two here. MSFO for Microsoft. On Tuesday, they were closing out their 545s and selling 542.50s for the following week and 540s for the following week. Resulted in a $254,000 profit. Then again, selling some more, like, yeah, because they closed out 1,600 and then sold 1,600. So then this other 1,000 they hadn't done yet. They sold it the next day, collecting another 193,000, selling out to the following week. Then on Thursday, we've got an adjustment here, adding to the synthetic, so more money came in. So adding to the synthetic is actually costing us, because if it's already in the money and we're buying the calls, they're going to cost a lot more. But then when we sell the calls to go along with them, we collect some money on that side. And then closing out the final positions, only 70 contracts left at 535 and selling 527.50s for the following week. $234,000 debit or loss on the day. Microsoft MSFO is part of Group C. Next declaration is in 11 days. Their 30-day IV decreased. I didn't really highlight them a ton on the ones that we're not worried about the distribution, so I'm not going to go back on all of them, but 17.6%. Their synthetic is for September 19th at $500 with Microsoft at $522. That's got a value of $6.7 million or 82 cents per share. There's $147 million assets under management, and there was a $500,000 increase in outstanding shares, bringing it up to 8.15 million. NAV is slightly below, 4 cents below the closing price on Friday. They've got calls sold now for this coming week: 527.50, 535, 540, and 542.50. They are anywhere from 1% to nearly 4% out of the money. And finally, NFLY for Netflix had trades on Tuesday, Wednesday, and Friday. Tuesday, closing out some 1192.50s, selling in the same week for 1177.50. So the stocks was dropping more 1195s, selling 1177.50s. $43,000 collected, still within the same week. Then the next day, closing out some 1192.50s and selling 1175s for the following week, collecting $245,000. And then finally, on Friday, closing everything out for the current week and rolling it to the following week. Plus, they actually closed out some 1175s here and had to sell them for $12.20. So I'm guessing Netflix had a big jump at the end of the week. Yeah. So while it was down, they sat there and readjusted, and then all of a sudden it ran up. But what can you do? That run up still results in an increase in our synthetic value. So NFLY is part of Group C. They declare in 11 days as well. Their 30-day IV has gone down over the last week, 25.8. They've got a synthetic at 1280 for September 19th, with Netflix closing at 1211. That's actually in the negative, so it would currently cost $9 million to close out the synthetic. We've got some time, though. It's got time to make it back to that 1280. It's 5.6% out of the money. 175 million assets under management, a little over 10 million outstanding shares. NAV and closing price are within a penny of each other, and they've got calls sold at 12.15, 12.20, and 12.30 for the next week. They are 0.2, 0.6, and 1.5% out of the money. So any type of a up week is going to blow through all of those. All right, that's it. That's all I've got for you. I know I said I was going to go faster, but I just didn't know what to skip, so I kind of went over everything. But thanks for watching. Appreciate it. And I got a dad joke of the day, so before I do, thank you for everything, all the support. You guys are great. Sorry if I'm talking quiet. I'm trying not to be loud and in a house being shared with everybody. But okay, dad joke. NASA is launching a satellite to say sorry to the aliens. They're calling it the Apollo G. Okay, have a good rest of your day, good weekend, and don't forget to watch out for the Sunday week look ahead and payment guesstimate video for ULTI and LFGY. Thank you and goodbye.